Hey everyone, CrowdStrike stock price is soaring after the company delivered better than expected quarterly earnings results. The company gave cybersecurity stock investors a bit of a relief after Palo Alto Networks scared a lot of cybersecurity investors and cautioned others, including myself. So let's take a look at these latest quarterly results and answer and update my buy recommendation for CrowdStrike stock. Coming into this quarter, I did not have CrowdStrike stock rated as a buy. My concern was that the valuation was too expensive, while admittedly stating that the company was an excellent business. So let's jump into these results and let's see if I'm upgrading CrowdStrike stock to a buy or keeping it as a hold.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, I just realized I didn't even consider listing CrowdStrike's stock as a sell, and that's just a testament to how strong the business is. I'm just not considering placing it on a sell list, which I reserve for companies that are struggling and their valuation is way, way too expensive, which, as we're going to see, is not really the case with CrowdStrike. So let's start with the results here, where the management says that customers favor their single platform approach, standardizing on CrowdStrike for cloud security, identity protection, among other solutions. CrowdStrike is the cybersecurity's consolidator of choice, innovator of choice, and platform of choice to start breaches. And similar to what Palo Alto Networks said in its report, clients are looking for consolidation. They want to go with one vendor, one company that can deliver several solutions so that they don't have to buy one thing from one cybersecurity provider, another thing from another, and they'd rather deal with one company and get all the solutions they need. And that's why CrowdStrike is saying that they're the consolidator of choice. And given their success in the latest quarter, far better than what Palo Alto Networks delivered, it seems to be true that companies are choosing CrowdStrike more often than not. And longer term, they remain focused on profitably scaling their business to 10 billion in annual recurring revenue and beyond that. And they've stated that they want to reach this target by 2030. They hit 3.44 billion in the latest update. So they've got a ways to go here, but you can see them making progress, 34% growth year over year. So they're making brisk progress towards that goal. And given companies are more and more so finding cybersecurity a must-have instead of a nice-to-have, the industry growth is likely to continue for throughout 2030, probably through 2040 as well. So for their latest quarter, total revenue of 845 million was a 33% increase. Their annual recurring revenue was up 34% as of the quarter, which ended on January 31st, 2024. The company delivered GAAP profitability on the bottom line. GAAP income from operations was 29.7 million compared to a loss of 61.5 million in the fourth quarter of last year. The company has made excellent progress in profitability, going from a 61 million loss to a 30 million profit, and they're forecasting strong profit growth for their next fiscal year as well, which I will share with you a little bit later in the video. Cash flow from operations increased to 347 million compared to 273 million in the same quarter last year. Free cash flow, which is the same as cash flow from operations minus capital expenditures, totaled 283 million compared to 209 million in the fourth quarter of 2023, roughly 40% growth in free cash flow. Very good growth indeed. For the full year, total revenue increased by 36% to 3 billion. And income from operations was a loss of 2 million for the full year. That was compared to a loss of 190 million for the full year in the prior year. Again, excellent improvement in business performance. Net cash from operations of 1.166 billion was up from 941 million in fiscal year 2023. So across the board, excellent performance from CrowdStrike, and investors were a little bit concerned given what Palo Alto Networks stated. And more so as information is coming out, it looks like Palo Alto's troubles are exclusive to Palo Alto. The company did note that they had trouble with government contracts, and that was one reason for the headwind in its latest quarter and one reason for the less than expected forecast going forward. Simultaneously, however, Palo Alto also said that they're ramping up competition. They're going to offer more free trials to try and steal away customers from rival cybersecurity providers. And so there was concern that would lead to shrinking margins industry-wide. But so far, we haven't seen that, although it is early days. Palo Alto only recently mentioned that, so we've yet to see the significant impacts from that strategy from Palo Alto Networks. It is a risk I have noted for industry-wide participants. It's still early though, so this isn't like an all clear sign, although this was like a relief, like, oh, good. CrowdStrike isn't seeing a big headwind as a result of this, right? Not in their latest quarterly results, and as we're going to see, not in their forecast for their next fiscal year. And so cybersecurity stock investors, CrowdStrike stock investors are breathing a breath of fresh air here, a sigh of relief. I mentioned the outlook, right? So for their full year, fiscal year 2025, which is going to start as of February of 2024. I know it's weird. Calendar year and fiscal year are different for several companies. CrowdStrike is one of them that chooses to have a different fiscal year than a calendar year. So they expect the revenue of, let's say, 3.95 billion, and let's just round it up to 4 billion in revenue for fiscal year 2025. And non-GAAP income from operations of 863 to 913 million, and let's say earnings per share of about $4 or $3.90. So roughly $4 per share in earnings per share for CrowdStrike for their next fiscal year, which is 2025. Great improvement, to be sure. Let's compare that with the current year. So in the current year, I mentioned total revenue came in at 3 billion. So if they do hit that target and get to 4 billion, that would be a roughly 25% increase in revenue year over year. That would be a slowdown from the 36% rate of increase, but on the higher end of industry participants in terms of revenue growth. That's solid. You're growing faster than the industry if you're hitting that rate of growth for CrowdStrike in its next fiscal year. So that would be solid, to be sure. Now, thinking about the price, it jumped roughly 20% in the after hours as a result of this very solid earnings report. And to update my recommendation of CrowdStrike stock, I had it as a hold coming into this report. And following the report, I'm going to keep it as a hold because of valuation. You're trading at a very expensive price. It's right now at $368 per share. And let's round up their earnings per share. Let's say they're going to get $4 per share in their next fiscal year. So you're paying a forward price to earnings, 1 year forward earnings. You're paying roughly 90 times forward earnings for CrowdStrike stock. Now, it's an excellent business, strong growth, strong increases in profitability. Still, I don't want to pay 90 times forward earnings, especially when I'm seeing some signs of increasing competition in the industry, which is getting really fuel putting on the fire from Palo Alto Networks. So I'm not in a position to feel comfortable paying that kind of valuation for a company that's in this position. So I'm keeping it rated as a hold, although it's moving closer. It's moving closer to becoming a buy just because of how strong the business is. Even if the industry itself may be slowing, or if the industry is facing stronger competition, If CrowdStrike continues to demonstrate these kinds of results, I may be willing to overlook those industry dynamics to go into a stock like CrowdStrike because of its ability to perform despite the headwinds. But for now, I'm keeping it rated as a hold. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.